All right, if we're introducing ourselves, so I'm Brian Brooks. I'm CEO of Bitfury Group and, itinerant crypto board member, advisor, and whatever. I've been at Bitfury about 6 months. And before that, I was briefly and happily briefly CEO of Binance US. And before that, I ran the Office of the Controller of the Currency in the last administration, doing, various things in fintech and crypto. Was chief legal officer of Coinbase at one point, and big investor in Jaime's company, among other things. So happy to be here.
Hey, I'm Chris Lawlor, president of Black Creek Crypto. We're a small mining company. Before that, I was one of the co-founders of a company called TQ Tezos. We were one of the core teams in the Tezos ecosystem, launched the first major proof of stake network.
And I'm Jaime Leverton. I'm the CEO. Oh, that was on Monday. We had the opportunity of ringing the bell on NASDAQ for the closing bell. So we're actually one of the oldest and largest publicly traded Bitcoin mining companies in the world. We were born through an RTO late 17, went public on the TSXV in 18. Uplisted to the big board in 2020, and then onto NASDAQ just last spring. And our claim to fame is that we're the OGs of hodling Bitcoin on balance sheet. So we've been keeping Bitcoin on our balance sheet since inception. Michael Saylor has now made it famous, and the institutions have kicked us off the top 10, but I get to say that for the rest of our lives, so that's good. We've got just over 6,300 self-mined Bitcoin on balance sheet, all of that unencumbered. Our mining locations are all in Canada. We take advantage of Mother Nature to cool our data centers. We've got 2 in Alberta, 1 in Ontario, and then we most recently purchased 5 traditional enterprise data centers. So we now have full stack cloud managed services and co-location business, all emission-free powered data centers, 2 in Toronto, 2 in Vancouver, 1 in northern BC, beautiful Kelowna, very similar to this landscape. So that's us. Thanks for having me. It's really, really nice to be here, Howard.
All right, well, anyone who's had their eyes open and has been paying attention to this space, I think has probably noticed that this has been an area of enormous investment. I would say enormous innovation, especially over the course of the last 12 to 18 months. I think one of the themes that has been central to a lot of the discussions, from where I sit, investors ask us, is top of mind is ESG, right? I mean, you get a lot of different opinions on the matter. I think there's, alarmists who think that Bitcoin as it exists today, I think it uses more electricity than the country of Argentina at the moment, and not always mined, or at least has not always historically been mined with the cleanest kind of sources of power as well. And then on the flip side, there's people who would make the argument that it can actually incentivize additional investment into the grid, particularly around renewables, and can play an important role in grid stability as well. So I'm just curious to get, all of your different perspectives, sitting in the different seats that you do. How do you think about that?
Well, I'm going to go last because I'm very verbose on the topic and I have big opinions. So I won't take anyone's thunder by taking 5 minutes, but I'll summarize what you two don't cover.
Well, I don't have any opinions at all, and I'm super quick. I'm really famous, Jaime, for very quickly.
Don't talk regulatory.
Exactly. I'll just give you a very quick thing. So I testified at the congressional hearing on this topic about 2 months ago.
Literally just said, don't talk regulatory.
Sorry. Anyway, great to be here, Jaime. Just 2 quick things. I mean, this comment of Bitcoin uses more energy than Argentina. What does that even mean? I mean, it's such a strange comment to me. And what I said in the House hearing on this topic is, who cares how much energy any given thing uses? It uses more energy than Argentina, significantly less energy than video gaming. These comparisons mean nothing. What we should care about in the world is, I believe anyway, what is the most efficient use of available energy that can be the cleanest total mix of energy available? So if I were to tell you that Bitcoin is a more efficient generator per unit of energy of $1 of value than lots of other things, that's the market telling you that they'd rather invest in Bitcoin for their next $1 of energy usage than invest in chemicals or aviation or car manufacturing or whatever other thing you want to say. The other thing you hear a lot about Bitcoin mining, which I find really interesting, is Every year, somebody is saying that by 4 years from now, Bitcoin will consume more energy than exists in all of the world, which reminds you of the famous Homer Simpson line in The Simpsons when he said, Marge, if current trends persist, there will be more lawyers than people in the United States by the year 2018. These comments are ultimately ignoring the basic economic concept of equilibrium. But the main point I just want to land is Bitcoin is a relatively efficient generator of economic value per unit of energy. It uses an overall energy mix that is roughly twice as green as the electric grid that you plug your toaster into every morning, and you have no problem using that grid. So if you believe those two things, then I think Bitcoin more than justifies its role in the ecosystem. And if you don't believe those two things, that's a good ground for discussion.
I think just, from a very practical standpoint, like I can tell you in terms of investment in renewables, we're in discussions and so many of the other, mining companies out there are with folks who are looking, at how you underwrite the construction of new generation, right? New green generation. And these conversations are happening across pretty much every Bitcoin mining company that I know of in the US every single day. And deals are actually getting done. So I'm sure you guys are working on some of this stuff too. So just from a boots on the ground perspective, I can tell you the narrative's not hollow.
Great job, guys. Bitcoin mining uses roughly the equivalent energy that Christmas lights do in North America. So this is not about how much energy we consume. This is a value judgment on, is Bitcoin worth any energy at all? And so that's really what the conversation needs to be reshaped towards. We use approximately, as an industry, just over 58% of the energy used is renewable. And a lot of the energy that's not renewable would otherwise be wasted energy. So and we've got tons of data on it as an industry for the last year. We've gotten together through the formation of the Bitcoin Mining Council. And what that council does is it actually gathers research and data, publishes it on a quarterly basis. It's open and available to everybody. We're just in the process of building our first quarter data, which will be shared within the next few weeks. If anyone's interested in the data, we can give you everything that we have. It's all publicly available on our website. And that answers the energy data conversation, but it doesn't answer the, do you personally value Bitcoin? Do you think Bitcoin has worth? So that's a conversation that we have to do a better job of having, and an argument we have to be better armed to win as an industry going forward.
Awesome, thank you. I know this one will be close to your heart, Brian. The other topic I wanted to bring up is hardware. It's been interesting to me to see everything that China's done, hardline stance on mining itself, obviously, and pretty much, the great migration, as they call it, out of China into the West. Still, most of the gear is coming out of that region. So, there are people trying to shake up that dynamic, including, some as we speak right here. What is that, what is how transformative is that for the industry? What's the timeline over what that happens? And I guess, maybe from Jaime and from Chris's perspective, as you think about diversity of gear and weighing that and maybe higher performance gear for that matter, and then weighing that against technology risk, how do you make that assessment?
Sure, I'm happy to kick it off. I mean, so one of the things that Bitfury does is design and produce Bitcoin mining ASICs and server hardware.
They used to be the dominant supplier in the industry by bar none.
Like in the early days, it's the market has obviously evolved a lot, but we released our first chip in 2013, and by 2016 it was sort of the major maker. But at a certain point, a couple of Chinese firms became dominant, and one of those, Bitmain, is now something like an 80% market share provider. What I would say is, as Jaime and I were discussing before the panel today, there's a little bit of a misconception out there, because you would assume, since there's a global chip shortage for all kinds of chips, that there would be a shortage of Bitcoin mining equipment. And the truth is a little bit different from that, I think, for a bunch of reasons you could unpack. I mean, at the moment, you sort of have two kinds of companies. You have my company, which is long on data centers and short on equipment. And then you have some of the biggest miners who were short on data centers and long on equipment. And this mismatch has created a world where the cost of mining rigs weirdly is coming way down. I personally believe, and I'd be interested in the other panelists' thoughts on this. I personally believe that one of the reasons for this is when China suddenly banned Bitcoin mining, which had a huge effect on the hash rate of the network. My personal belief is that caused savvy miners to delay upgrades to their systems because suddenly the hash rate went down so much that you could still be highly profitable using 1 and 2 year old equipment. And so you didn't need to do the spend at that time. And so companies like Marathon and Riot, who were sitting on the newest machines, sort of waited a little while to plug them in because they just didn't need to bother. That's a surmise that I have. I'm not sure that's correct. Having said that, however, now that you have Intel about to enter the Bitcoin mining equipment market, you don't know how disruptive that'll be for Bitmain's quasi-monopoly. We, of course, have a new chip in the market and a new design being taped out as we speak, and that will give people, for the first time in a while, a non-China based sort of option in the server market. And then the last thing I would say is all of this sort of assumes relative stability in terms of the current foundries that produce microchips. As most of you know, virtually all advanced process nodes for this kind of ASIC exist in only 2 places in the world, at the Samsung foundry in Korea and the TSMC foundry in Taiwan. If there were to be military action in the Taiwan Straits, what would that do to the overall macro environment? That's really hard to say. But for the first time, things that used to be unthinkable are now unlikely but thinkable. And so that could change all of this.
I think one thing that we think a lot about is competition, right? So Bitmain does have extremely dominant market share. Intel came in and priced their chips substantially cheaper than Bitmain did. If anyone here was in Miami last week for the Bitcoin conference and you walked the trade show floor, you would have seen booths for a ton of people bring new hardware to market. Some of that could easily be snake oil. Some of that is possibly very legitimate. But ultimately, there will inevitably be price pressure. Bitmain's margins right now are out of control. And so, when you start to see those costs coming down, it does a couple interesting things, right? Right now, in the state of the Bitcoin mining market, most miners have a shortage of 1 or 2 of 3 things. Either that's their ASICs, their power capacity, like their plugs / data centers, or capital, right? When you start to lower, the price and increase the supply of ASICs, you completely change the market dynamic, right? For me personally, I think that's really good for the Bitcoin network. You end up strengthening the network pretty meaningfully. Right now, there are a handful of extremely large miners. I don't see that as a risk, frankly, at all. But I do think the increased resilience you get from the ability of many smaller miners and even individuals, with access to power potentially in their homes with more efficient machines, is good overall for the Bitcoin network. And it completely, does change the dynamics of the industry. I'm curious, for some of the public market guys who right now have, better access to capital markets and a real head start on the other 2 elements, how that shifts, the way they have to think about deploying capital over time.
Yeah, and I can't speak for all publics, of which there are many more today than there were a year ago. There are, I think the last time I counted, there are 20 publicly traded miners in North America alone. This time last year, there were 6. So what we saw was a whole bunch of capital flood into these new entrants into the space, a lot of them through SPAC vehicles. And because of the last year, the dynamic that was happening in the marketplace was everybody's constraint was chips, was mining rigs. And so people rushed to the public markets to get capital in order to put deposits down to get themselves in queue for hardware to come from China. The process of that is you raise a bunch of capital from shareholders. You then sign a contract with a Chinese manufacturer that gives you absolutely no rights, no recourse, no ability to negotiate whatsoever. You then send tens of millions of dollars to China and you start to pray that in return you get something that looks similar to what you asked for somewhere in around the timeline that you asked for it. And if not, again, you have no recourse. So and this is kind of part of the nature of the beast of this industry being so nascent and historically so dominated by China and Chinese manufacturers. So the fact that we're starting to see new entrants, Intel coming is a huge relief, especially I believe for publics like myself, because we need the space to get more professionalized. We need to be able to have more traditional stable terms and stable counterparties, which is exactly what we're seeing. And yes, the supply chain dynamic has now flipped. There's a ton of available supply in North America. Pricing's come down significantly. People have not been able to deploy machines as quickly as they thought because the supply chain has actually really disrupted the power infrastructure. So the shortages are now in transformers and PDUs and routing and switching gear. So people haven't been able to build the mines fast enough to get the machines deployed to light them up. And so they're trying to sell them forward to new people, in part because the capital markets at the same time have dried up. Capital markets are now closed. So you've got all these publics that raised a bunch of money, deployed a bunch of capital to get in line for machines. Now they have to pay the second half of that, and they can't access the capital markets to do that. So they're trying to sell the forward contracts of the machines to try to pay the outstanding bills. And it's just it's a real mess, and the whole thing changed overnight. So one of the things that we do, again, being around as long as we we were born in a bull market, hobbled out of the bear market, and then have had a good run in this bull market. But we've taken a balance sheet first approach so that we have buffer for when the dynamics change, because they change overnight. You don't know how they're going to change, and you need to have that protection kind of embedded into your business plan.
Mm-hmm. All right, let's talk about proof of stake, other sort of alternative consensus mechanisms that are not proof of work. Certainly seem to be getting a lot of the mind share in the broader ecosystem today. What is it, in your view, that is special about Bitcoin or enables Bitcoin, to continue to be able to operate the way it does, even within the context of its limitations, right? Transaction speed and so forth.
Well, so I would start by saying that proof of stake is not an alternative to proof of work. Proof of stake is just something different from proof of work. It's sort of like saying that the dollar is not a competition with neobanks. I mean, they're both kind of financial concepts, but one is money and the other is a bank. So, when you think about it, proof of work exists for a particular reason, really a couple of reasons. One reason is it provides security in a way that is different from traditional corporate governance. And so if you think about what proof of stake is, proof of stake says, whoever owns the most tokens is like the dominant shareholder. So like Elon Musk can go become the dominant guy at Twitter if he wants to buy enough shares, and woe unto anybody who's a small shareholder, right? Proof of work's not like that. What proof of work says is that you're going to have to spend money to enter a lottery to win Bitcoin, but nobody controls the Bitcoin blockchain. There is like when people talk about, gee, you've got this small number of miners that are doing all the miners, that's actually almost irrelevant, because all the miners are doing is buying lottery tickets. They're not actually validating the Bitcoin blockchain, right? The software is validating the Bitcoin blockchain. What you're doing is devoting compute power to something that uses energy as its security. So that's the first thing I would say. The second thing that's really important to understand is when people believe somehow, and so what I just gave is a speech to the proof of stake people. Now I will give a speech to the proof of work people. Proof of stake is not bullshit. Okay, these are not shit coins. That's actually not the case. What's really going on, and the reason that Bitcoin is so important, is that in many of these proof of stake based DeFi protocols in particular, what's really going on is the DeFi protocol is creating a decentralized platform for people to engage in lending and trading and various things. But the underlying collateral asset or reference asset for purposes of generating the value that is delivered to holders of these DeFi tokens is Bitcoin. So if you go to BlockFi and you're wondering, where does that 8% rate of return come from? Mostly where BlockFi's 8% rate of return is coming from is Genesis is trading Bitcoin futures, because Bitcoin is the only thing in this ecosystem that is actually money. Right? Every other thing is sort of like an internet protocol that's doing something super cool and bringing it to you. But at the end of the day, it's like Expedia wouldn't exist without United Airlines, and BlockFi wouldn't exist without Bitcoin. So these are not competitions here. Bitcoin has a role to play in the ecosystem. That role is never going to go away. And other things, even ETH 2.0 may transition to proof of stake, which is totally fine given what Ether is all about. But Bitcoin is and has to be proof of work based, and we don't actually want it to change for that reason.
It's hard to follow up that one.
The-
I'd ask some people to have picket signs in the back, but they may not. Howard, do they hear you at the picketers? No, all right, never mind.
They weren't allowed through the gate. The only thing I'll add, proof of stake, one of the challenges as far as the ethos around proof of work versus proof of stake, anybody can buy one of these lottery tickets. Anyone can run a miner and try to win a block in the Bitcoin network. And anybody can run a node in the Bitcoin network. There are, I don't know, last count, over 14,000 nodes running. They all have a copy of the blockchain ledger running on them. They're all part of the ecosystem. And to run a node costs next to nothing. With respect to proof of stake, only the rich can play. You have to have enough money to have this, whatever the staking requirements are for the token. And therefore, it's really not decentralized and it's really not democratized.
It's interesting, actually, to tie a couple of those different threads together. Someone was making a comment to me the other day. You have two dynamics. You have one, Bitcoin mining is a pretty pure play commodity sort of operation, right? I mean, I think it's like the purest commodity really on the planet Earth in a lot of ways. In commodity businesses, you'll oftentimes see markets revert to scale. The rewards are for scale. And then on the other side, you have the Bitcoin protocol itself. If you have any one party owns too much of it, right, then you've got your own issues. And we've seen that historically, at least from time to time, with certain pools, getting close to 50 or maybe even in some instances a little bit over 50. So how do you sort of like put those two things side by side? I mean, is it something that is even a consideration at the moment in the absence of any sort of market mechanisms or regulations that would solve for something like that?
Well, why don't you go? I've been filibustering the whole time. It's your turn. I'm losing my voice anyway. But I was just going to say
a really short answer. There's a natural incentive in the Bitcoin mining community and for folks who write pool software and operate mining pools, not to have any real concentration risk, because the worst possible thing for everybody in this industry would be if people lose faith in Bitcoin, right? And so everyone's revenues were created as zero in US dollar terms. It would be an absolute disaster. So there's an incredibly strong disincentive, for parties who even could plausibly think about trying to bring centralization to the network. And more realistically, I think there's a strong enough economic incentive for a lot of people out there to mine independently, right? And this is back to the idea of, okay, more ASICs and cheaper ASICs is good for the resiliency of the Bitcoin network. There's probably not a state of the world for much longer where it's even a real risk, in my opinion. Right? That's kind of at least how I would think about it. And the sort of final thing is that as you start diversifying that network across the different varieties of call it motivations for mining, you quickly realize that there are some people who are in this just to accumulate Bitcoin long term, right? There are some people who are in it and liquidate quickly and they're in it for US dollar returns. The treasury management strategies that people have and bring to this, because they come with different motivations, also sort of naturally, lead to the fact that people do not want to centralize. They're going to want to maintain either their margins or the value of the Bitcoin that they're accumulating.
And I think from a participant layer perspective, we're still early days. The energy companies haven't come in yet. They have a completely different incentive to start mining Bitcoin, and it's in order for them to monetize their wasted energy. Exxon's got 4 pilot sites up right now. Conoco's got 1. So when energy companies start coming in at scale, when sovereign nations start mining to get virgin coin created on their own soil, as all of these things start to happen, you're just going to have increased decentralization and completely different motivations happening on the network. And so long way for me to say, I don't think it's a risk. It would have happened by now. It's never happened.
Fair enough. So you think about different models that are being built in this world, you've got infrastructure light, you've got infrastructure heavy, you've got an ecosystem of services which are starting to emerge. A lot of the activities is at the miners. I mean, you've got the ASIC manufacturing as well, right? Like, is there not a loaded question, not trying to make it a loaded question anyway, but is there like a convergence there? Where does that ultimately end up? And is there sort of like a short-term play versus a longer-term play? Is it going to be critical to have ASIC capabilities of your own at some point if you really want to?
Maybe I can speak to that because I think Bitfury is an example of a company that tried to do that. And the question is, did it work?
And took me down with them.
Yeah, well, or it made you the CEO of one of America's most important mining companies.
Either way.
Thank you very much.
Either way.
I mean, look, so Bitfury early on had a theory that vertical integration really mattered. And so the thinking was, well, if we could own the power contracts and we could own the ASICs and we could own the data centers either alone or in JV with a power company, then suddenly that would give us some massive advantage. And I think, the point that was just being made, which is as you have innovations in technology, it becomes more possible for other people to compete. It's possible that in some of these businesses, there are literally diseconomies of scale. I mean, the one economy of scale that is definitely true in this space is access to capital. That's the one thing, because if you're operating a miner, you do have to upgrade your equipment every couple of years if you're going to remain ahead of the network difficulty increase. But other than that, I got to say, in a world where Intel, which owns the design and owns the fabricator, how's anybody going to compete with that? There's no Bitcoin miner that's going to be an ASIC builder as good as Intel, even if the design is better. It's sort of like you can't beat Microsoft in operating systems. Their operating system sucks, but network effects being what they are, they will always own that business as long as people have Dell computers on their desk, right? So I think Bitfury is an example of we're starting to realize there are some diseconomies of scale. Some of these businesses probably don't fit all that well together, and chip design belongs in the hands of somebody with an enormous amount of scale. That's probably not us. Mining might have nothing to do with scale other than for the public miners who have capital. So it might make more sense to either be smaller or bigger than we are. But I'm going to just make the provocative comment that no, I think the answer to the question is no.
I agree it's no.
I think it comes down, I also agree it's no. I think there's a lot of people that have really different motivations, again, for why they mine, right? So, I know groups out there, and we're not one of them, but whose goal is to take every fiat dollar they can get their hands on and turn it into Bitcoin, right? In that case, you're probably unlikely to try to construct your own world-class data center. You're very likely to buy as many ASICs as you possibly can. You're probably a little bit less sensitive to power price. I mean, you're very sensitive, but you're willing to pay a premium to plug those in because you just want Bitcoin. For other folks, if the goal is some version of ROIC or IRR, you name it, the way you think about deploying your capital is going to change. And so I do think that essentially the investor base of whichever miner you're looking at probably also ends up dictating which of those models makes the most sense.
Oh,
yeah, no, I was just going to say that raises a good point, which is there are so many publics out there. We all have slightly different business models, and it's really for the investor to look at the models and figure out which one aligns to what they're looking for from a miner.
Chris, I'd be curious, I've been waiting for an opportunity to introduce the question. I think this is as good as any. Maybe describe your experience as, someone who's not already a publicly traded miner with that access to capital we've touched upon. How do you, and especially in this sort of market environment, how are you getting off the ground? How are you making a name for yourself? How are you going about building your business?
Yeah, it's an interesting question. Right now, there's a lot of people like us, insofar as that lots of people want to be Bitcoin miners, right? And don't have access to public market capital. People come at it with different advantages, right? Our team is fortunate in a couple ways. The backgrounds of my two co-founders are both Wall Street, so we have more access to capital than most people who would be getting into this game right now. We also have someone who has deep ties to China, which has helped us with the hardware side, right? And so you sort of have to play your hand. That said, for us, our real focus and the reason we exist is to put the highest quality hash power we possibly can onto the network, right? So we focus on efficiency. We use immersion cooling, pure play. So that'll kind of be, I think, the future of the industry. Most people probably would agree on that over the long run. I don't know, maybe not. You're in Canada. This doesn't count. Yeah.
Since we own an immersion cooling business, we'll talk about this.
But so we think about it, purely from an efficiency standpoint, and we're at a stage right now where when we choose not to take incremental dilution, we do reinvest. We don't hold all our Bitcoin. We sell and reinvest, right? And so and that's a choice that we make, right? And that is different. That there's no right or wrong answer. That's but that's the approach that we've taken.
You're going to say something, Jamie?
No.
I mean, I think we're maybe just a little bit more open-ended for the last tier, and then we'll open it up for questions. What are people, in your view, not paying enough attention to in mining right now? I think we've touched upon a lot of the things that people are, sort of front and center. But what's going on in the background? When boots on the ground sort of perspective there.
Well, maybe I can talk. The one thing I would focus on is we're going to lose the ESG debate, which then means we're going to lose Bitcoin if the only people who take our side of it are the Bitcoin miners. We need a different set of voices out there talking about this. And who we really need talking about this are the solar and wind companies, right? We need solar and wind companies to say publicly, our next solar project can't be profitable without a Bitcoin mining partner, which is true. It's 100% true. And all of us know that we're all spending half of our time bidding for solar and wind contracts because every developer holds an RFP. Right? They can't be profitable without either a government subsidy or a Bitcoin miner. But as long as this Bitcoin miner is talking about this, we seem self-interested, we seem profit motivated or whatever, and those people think we're the bad guys. We need to really significantly change that narrative. There's a real risk. You probably saw in the EU just a couple of weeks ago, there was a close vote. I mean, what was 31 to 22 or something to ban Bitcoin from the entire Eurozone. I mean, we're this close to losing Bitcoin. And for those of you working in other areas, let me just tell you, if we lose Bitcoin, crypto's over. And that is because Bitcoin is way too important elsewhere in the crypto ecosystem. So it's in all of our interest that not happen. And that means other people have to be talking.
Yeah, I think people forget that if there are no miners, there is no Bitcoin. They are inextricably linked.
Nothing to add.
All right. All right. Well, I guess we've got 5 more minutes. I mean, time for questions. Any? Great.
Yeah, just want to ask. So I also started as a individual miner back in many years, and also I managed a big mining fund in China before. So I'm curious about what you guys think the future of mining, Bitcoin mining is. It will be like a takeover by the large corporations, or there's some potential possibility for hash token for like the majority people to invest and share revenue from the mining things. What do you think about that?
Hash tokens are an interesting concept, super tricky for publics right now with regulatory uncertainty. I don't see that in the short term. In the long term, for sure. I think there's room for all different types of miners, as we touched on earlier. An energy company, a sovereign wealth fund, a local government, a pure play miner, all exist for different reasons, have different business models. Absolutely, I think there's room for all of them. And we saw when China banned Bitcoin mining, the network hash rate dropped by 50%. Everybody operating on the networks, profitability doubled overnight without a single increase to their operating expenses, and the network did not blink. So when you think about how beautiful the technology is, how robust and dynamic it is, I think it will continue to kind of morph and flow over time, but it's never going to be a one size fits all ecosystem. It just doesn't make sense, and it's always changing.
Yeah, I would add that in terms of how individuals get involved, I think there's a lot of potential, right? Ways that ownership could be, split, and mining companies, or future, groups that come together to capitalize these projects, I think are going to be pretty innovative there. Probably not the more conservative private miners, and certainly not the public ones. But I also think that how those mines get deployed is probably what's likely to start looking sort of similar across a lot of areas, right? So it's inextricably linked to energy. So if you think about To Brian's point, the renewables projects coming online now that need Bitcoin as a way to be profitable, or energy storage, projects that can use Bitcoin to increase profitability. Those sorts of things I think are going to start looking somewhat copy and paste in a lot of different areas, and that's a good thing for the network, because that's extremely efficient mining.
But we're also looking at, the Middle East is looking at, can they bring miners in to capture flare gas and keep that from going into the environment? And the motivation there, they could actually lose money because it's not for them. It's not about the Bitcoin. It's about capturing flare and being purposeful about how that's ultimately repurposed.
Yeah, I just put one gloss on it, which I think answers part of your question, or maybe it's just something I was going to say anyway. And that is, I have a thesis that 10 years from now, most miners are going to be owned by large power companies, because the core thing that Bitcoin is it's tokenized energy. That really is what it is. And it makes a lot more sense, I think, for these things not to be integrated with other parts of the Bitcoin technology, but to be integrated with the ultimate value creation, which is energy price. So my guess is that, 10 years from now, 80%, 85% of hash power is owned by a handful of global energy conglomerates, and the rest are very small companies that are, startups or individuals mining their own Bitcoin. And I think the other thing that will create pressure for that outcome is that you're going to see companies like BlackRock and other sort of ESG forward investors that are going to try and influence Bitcoin mining by buying renewable only miners. And that will put enormous pressure on that symbiosis I was just talking about. To get a power company to invest in solar or wind has to be more profitable, and you have to have the capital to do that. So BlackRock shows up, they provide the capital, and suddenly you discover that your solar and wind can be profitable because you're mining Bitcoin. There's going to be a flywheel along those lines. And so, we all kind of created the tech in the early days. My guess is long term, it does not make sense for these companies to be standalone companies. It makes sense for the people supplying the core input to own them. I could be wrong, but that's my.
I totally disagree with that, but we won't take time. We will have a healthy debate over dinner. If anybody wants to come and listen to Brian and I fight, please do.
Went straight from discussion to fight.
So Rob, we have time for maybe 2 or 3 more questions. I wanted to bring in the online audience for one, if you don't mind. From an investor's perspective, what's the best reason to invest in the equity of mining operations versus the same capital to purchase coins outright?
Great question.
Well, it has to do with it's basically you're buying Bitcoin futures when you buy a miner is the idea. So you're making a prediction on future price versus if you buy a Bitcoin today. I mean, if you think about it, so at Bitfury, our fully loaded cost to produce a Bitcoin is about $8,000. Right. So our equity represents the division of all of that divided by $8,000, or you could buy a Bitcoin for $40,000. What you're doing is you're making a price prediction.
Yeah. And then I would say miners like us that hodl. So you get your upside in 2 ways: ongoing production plus the appreciation of Bitcoin that's held on balance sheet over time. So we tend to run, if Bitcoin's running hot, we're running hotter. And then unlike if you aren't comfortable getting your own hot wallet or cold wallet, it gives you a pretty straight proxy with some incremental upside. And unlike an ETF, which we have in Canada, you don't have the fees associated, right? We just trade like a straight equity. So it's a good, easy proxy. You can put it in your 401k. And that was kind of the premise on which a lot of the early public miners were built. They were built to give easy access into an equity portfolio to Bitcoin.
That's good.
Fantastic panel. Just a quick question on the Bitcoin, the balance sheet approach. What do you think of what's happening with Terra or Luna's ecosystem, where they're purchasing Bitcoin to backstop the entire token economy? How do you see it going well for the ecosystem, but also is there a good, bad, ugly scenario that you see happening in the future?
I would just observe as a place. I mean, first of all, I think Luna is actually one of the most interesting projects in the ecosystem, and I wish I bought more of it 6 months ago, to be honest. But the only comment I was going to make is it further.
That is not investment advice.
Yeah. Well, saying you wish you'd done something in the past is totally clear. Saying you might do that tomorrow, I said nothing about that. But it just reinforces the point I was trying to make, which is Bitcoin is a lot more important than its mere market cap. It becomes the reference asset for a set of algorithmic stable coins, for a set of other kinds of projects, and as the network basis for Lightning and a million other things. So I would just comment, it's further evidence of that, right? It's critical whether you like it or not. Things like Terra are not going to succeed without it.
I think it was broadly already happening. This just put like a really big headline on it. Yes, Tim.
Brian, can you go back to the regulatory discussion? And you mentioned the EU and coin. And just sort of paint the picture of the regulatory mosaic today, because it could be a bit of a prisoner's dilemma. If they leave, somebody else takes, the Arctic says, great, we're going to be the, Finland says, whatever. So what does the mosaic look like? Because this to me looks like the existential risk here to the whole industry.
Yeah, it's a great question. When you asked me if I could go back to the regulatory, I was going to interrupt and just say no, but since you finished your question. So my negative, like my pessimistic scenario for all of this, I have an optimistic and a pessimistic. The pessimistic scenario is that the G20 countries basically exit Bitcoin, which means they exit crypto. Okay. They do it under cover of ESG, but that's not really what it's about. We all understand this, right? ESG is a cover story for what is.
They get Greta to do it.
Yeah, exactly. Greta becomes the useful, as they said about the bourgeoisie and the Russian Revolution. I don't want to say that she's a useful idiot, but she doesn't know what's actually happening here. So the pessimistic world is what's left in the world of crypto is the emerging country, what we used to call the BRICS. It's Brazil and Abu Dhabi and Singapore. And so you have this bifurcation of the world into old economy, like the Roman Empire reassembles itself, but post Gothic invasion, right? And we're the Romans. So we decided we're going to extricate ourselves from this under cover of ESG. And the people who really grow are Singapore, Abu Dhabi, Brazil, and a handful of other countries. And that is a realistic possibility. Why is that happening? It's happening for reasons that have absolutely nothing to do with ESG, even though we say it's about ESG. What it has to do with is this, okay? And now I'm putting on my bank regulator hat for a moment. For the last 500 years, right, the West has lived in a world where we have this very weird financial system where you have governments that create the money and you have people like all of us who use the money. But weirdly, we created this middleman called banks, to kind of like intermediate those two constituencies. Banks themselves are not a constituency. They're just the conveyor belt back and forth. Because Bitcoin was invented, and so we no longer need intermediaries, we are now watching an epic, not just generational, but epochal, am I saying that right? Struggle between those who want to move from this weird bank intermediated world to a government controlled world and those who want to move to a user controlled world. ESG is the convenience story that is designed to convince you that we need to move to a government controlled world. And remember, these people know that if Bitcoin goes down, all of crypto goes down. It's not just about Bitcoin. So once all of crypto goes down, what happens next? What happens next is we finally get the central bank digital currency that everybody's so excited about. And then we get massive government surveillance of transactions. The government is allocating capital. They can control the money supply by haircutting your checking account versus moving interest rates back and forth, et cetera.
That's the China strategy.
Exactly. And that is in fact the articulated position of a significant number of senior people throughout the G20, starting with Christine Lagarde. That is not even a covert strategy. But the way we get there is we ban Bitcoin through ESG. Or we get solar and wind companies talking, we win that debate, and we move to a user-controlled world. So there's a very optimistic scenario here, but there's also a deeply pessimistic scenario. And if you think I'm making it up, and we got a lot of Canadians in the room, everybody saw what happened with the Canadian trucker protest, the shutting down of bank accounts with no due process. I mean, like crazy stuff going on. This is a real thing in the West now. And it's not clear which future we're going to have.
Good news. Justin just announced an incremental tax on large trucks this morning.
Great news.
Yeah. And the war is not over against the truckers in Canada.
They used to call me paranoid when I said things like that, and it all came true.
Howard, you're going to yell at me if I don't wrap it up.
Yeah, we have.
This wasn't interesting enough. We should probably just stop talking.
Running out of time here. Well, you can be both paranoid and also realistic. So yeah, it's true. It's a true thing. It's a real thing. Great panel. Thank you very much.
Thank you. Thank you, everyone.
Thank you.